All right, everybody, welcome back. Ready for another deep dive.
Definitely. Always ready to jump into some data.
Well, today we're going where a lot of folks are probably feeling some anxiety, some nervousness.
Yeah.
We're talking about cryptocurrency, specifically Bitcoin,
Okay.
and why it seems to be, well, let's just say, not having a great time in the U.S. right now.
Yeah, definitely underperforming, especially compared to other regions.
We've got this article, Bitcoin's USA drop, an analysis.
Yeah.
Really lays things out. So we're going to, break it all down, try to figure out what's really going on and what it means, for folks who are interested in the crypto space.
Right.
All right. So to kick things off, this isn't just like your average little Bitcoin dip, right? This seems like something a little more, well, pointed, wouldn't you say?
I'd agree with that, yeah. The article actually calls it a perfect storm, specifically for the U.S.
Perfect storm. That sounds a little ominous.
It does, a little bit. But it captures the situation pretty well. There are just so many factors hitting the U.S. crypto market all at once. It's not just one thing.
So break it down for us. What are these storm clouds gathering over Bitcoin here in the U.S.?
Okay, so first you've got the government regulations. The U.S. has been pretty active on that front, rolling out some pretty strict rules around crypto transactions like know your customer and anti-money laundering stuff, which those have been on the horizon for a while, but they are definitely making an impact.
Right, trying to rein in this wild west of finance a little bit.
Exactly. And then on top of that, you've got the Federal Reserve, right? They've been hiking interest rates like it's nobody's business.
Yeah.
And whenever that happens, investors get a little jumpy, a little more risk averse.
Makes sense. Safer bets start looking more appealing when things feel a little shaky.
Right, exactly. And then to add even more fuel to the fire, you've got these rumors floating around, and nobody really knows how much weight to give these, but rumors about a potential crackdown on stablecoins.
Stablecoins. Those are usually seen as kind of the safer haven in the crypto world, right? Pegged to the U.S. dollar, supposed to be less volatile.
Exactly. So if there's even a whiff of a crackdown on those, it's going to send ripples through the whole market, especially here in the U.S.
Yeah.
It all adds up to, a perfect storm makes U.S. investors a little more uneasy, a little less willing to jump in.
Yeah, I see how that could definitely make folks hit the pause button on any big crypto moves.
Mm-hmm.
But here's the thing, and maybe this is a naive question, but isn't volatility like the defining feature of cryptocurrency? I mean, we see Bitcoin swing up and down all the time. What makes this particular drop, what makes this perfect storm something that, say, an average Bitcoin holder should really be concerned about?
That's a great question, and you're absolutely right. Volatility is baked into crypto. It's part of the deal. But what's different this time, I think, is the sheer number of factors all aligning at once. The regulations, the interest rates, the stable coin whispers, it creates a level of uncertainty we haven't really seen in a while. It's not just the drop itself, it's the context, the reasons behind it that are raising eyebrows.
So for somebody who, maybe bought into Bitcoin a while back, rode the wave, maybe saw some good returns, now things are looking a little less rosy. What's your advice? Batten down the hatches, weather the storm. What should folks be thinking about?
Well, panic is never a good strategy.
Yeah, nobody makes good decisions when they panic.
Exactly. But this might be a really good time for folks to take a fresh look at their portfolios. The golden rule of investing, it applies here too, maybe even more so with crypto. Diversification, diversification, diversification.
Don't put all your eggs in one basket.
Exactly. So that might mean looking at other cryptocurrencies, spreading things around a little, or even considering investments outside the crypto market entirely. Stocks, bonds, real estate, the classic stuff. It's all about managing risk. And right now, risk in the U.S. crypto market is feeling particularly, risky.
So not necessarily jump ship, but maybe, add some lifeboats.
Exactly. Yeah. And it's also a good time to really check in with your investment strategy. Are you in it for the long haul? Do you believe in the fundamentals of Bitcoin and you're willing to ride out the bumps? Or are you looking for short-term gains? Your strategy will tell you how you should be reacting to these dips and spikes.
Right. So like if you're a long-term holder, maybe this dip is actually an opportunity.
Could be, yeah. If you believe in the long-term potential, buying low is always the goal. But, if you're a short-term trader, this might be a time to reevaluate, to be a little more cautious.
So the takeaway here is don't freak out, but don't bury your head in the sand either. Stay informed, stay engaged, and maybe maybe adjust your sails a little bit.
Couldn't have said it better myself. Knowledge is power, especially in a market as dynamic and frankly as unpredictable as cryptocurrency.
Absolutely. All right. Well, I think we've navigated this Bitcoin storm pretty well. Any final thoughts for our listeners before we wrap up this deep dive?
I think the big takeaway here is the volatile nature of the cryptocurrency market. We've explored some potential reasons for this drop in the US today, but it's just a snapshot. It's one moment in time. And to really understand what's going on, what this means for the future of Bitcoin, you got to look beyond just the price fluctuations. You got to dig into those global economic trends, the regulatory changes that are happening all over the world.
Always zooming out to see the bigger picture.
Exactly. That's how you make informed decisions.
Great advice. All right, everybody. Thanks for joining us in this deep dive. We'll catch you next time.
See you then.